Welcome to Charts Today. My name's David Linton, and today's edition for Thursday, the 15th of September, comes to you from London. And I've been busy preparing my slides for the IFTA conference in Melbourne in a few weeks' time, and I'm just looking at some of the long-term charts. I couldn't help keeping this chart up. This is the US bond, the main 10-year bond, the actual bond rather than the yield. We normally look at the yields, and we see here how we failed to get to the top of the trend on the bonds, and then we've made a lower low, making really 10-year lows here. Remember, this chart goes back to the mid-80s. So bond markets are normally the first to crack if we see financial turmoil, and so this classic uptrend in the bond market that's been going for some 40 years is clearly coming to an end. So that's just one big element of worry for the outlook for markets. Looking at currencies, first of all, the dollar is back recovering, so we're back to bullish territory on all three timeframes: long-term, medium-term, and short-term view. And this big upside target here, this new one, showing us the dollar is going much, much higher. These targets are really quite scary. And of course, for the euro, we're seeing similarly scary downside targets, 24%, 40% lower. This sounds just ridiculous, I know, but those targets have been hanging over us, and we're seeing more downside here for the euro, back below parity this morning, of course. And so really not looking good. Sterling is actually looking a little bit better against that US dollar. Interest rate expectations in the UK increasing, and if we look at against the euro, it's above this 115 level. That's critical support that sterling needs to hold. So essentially, it's a sideways trend long term for euro sterling, just falling on the medium term, and the short term we are just coming back up. Bitcoin managing to hold the $20 mark, so that's quite key. The $20,000 mark, so that's quite key. The S&P 500 index bounced 0.3%. Remembering yesterday that, the day before, we actually fell by some 4% on the US. So it really is a small bounce in response to that. So this testing of the cloud here is going to be really, really key. Most other markets lower. We haven't quite opened yet this morning, but we saw yesterday, we saw further falls in Germany. The DAX down 1.2%. Below the cloud there on the weekly, not looking good at all. Overnight, we saw the Sensex actually just giving up some ground. This is still one of the best looking markets, and nudging new highs here with upside targets, waiting for this new upside target to be activated on the 1% chart. The Aussie market, no change there. And if we look at Brent crude, we are down we're up 1.5%. We'll look at the energy mix shortly. Gold sitting below that $1,700 mark, so that's really quite key. We've broken that. The key thing is, can we hold this support level? It's a pretty clear support level for gold. So, that's the key thing. Can we hold this support level? Looking across there, it's about 1680, 1670. So really, we just need to hold that. That's going to be quite key. Other precious metals falling away, silver, etc. Looking quickly at the energy mix, again, we're slightly ahead of the open this morning. Brent crude looking higher, as is WTI. We'll be putting our morning report out to clients any moment. And looking at the emissions market, we're seeing just a little bit of a turnaround here, so starting to look a bit more perky. Definitely found a floor at around 65. Gas prices yesterday were pretty strong. We saw TTF up 11% and NBP up 15%, back above those critical levels. 200 for TTF, 400 for NBP. That's where we got to. And German power surging back above that 500 euro mark. So back in the game, although we are still short term below the cloud. That's it for today. Until tomorrow, happy charting. See you then.